notifications
about to
because
check
this
on this
right
thing.
here is
Hopefully,
the
I ain't burn
beginner's
it out.
course and this is part of the
Yeah,
series.
hopefully,
So
I ain't
don't
burn
miss
it
the
out.
option training
Hold on 1 second.
one that I
Let me
did
grab
prior
a
to this
cup.
video. And you don't want to miss the support and resistance after this candlestick video. Now we're going to hop right into it because I don't want to waste you guys' time. Now, before I can even teach you the candlesticks, I have to go over a little basic term here: bullish and bearish. Bulls strike up, bears strike down. So that is about the fighting attack style of the animal. So that is why in the market, we're talking about a bull market, we're talking about a prolonged period of increased prices, and we're talking about a bear market. We're talking about a prolonged period of decreased prices. All right. And to give you guys a fun fact, there's a city called Chicago that has sports teams, Bulls and Bears. Chicago Bulls, Chicago Bears. All right. So now that you guys know that, when I say the Bulls, I'm talking about the people who are buyers. When I'm talking about the Bears, I'm talking about the people who are sellers. Let's get right into how to understand candlesticks. So, boom, candlesticks. All right. They are originally a Japanese structure that was meant to trade rice. So if you guys want to know that part, you guys got the background of candlesticks. All right. Now we're gonna hop right into it. We're not gonna waste you guys' time anymore. Now let's draw some numbers real quick. We have 13 here, 10.
Take this bad boy
Let's
out first.
configure that. We can do
Cut
that.
that thing off.
We got 13, we got 10, and we have,
Shoot that.
let's say 7, and then we have 5. All right. Now, when we're trading candlesticks,
Oh shit! Dang, I can't even see it.
this is how the before I get into candlesticks and all of that too, I do need to explain something. Every candlestick is represented on the time period that we're talking about. So if we're on the daily chart, this is the 1 day chart. Every candlestick you see is 1 day. Okay, and remember the stock market is from 9:30 a.m. Eastern time to 4 p.m. Eastern time. So that is what the stock market is ran off of because New York is the hub of the stock market. Okay, if we're on the 4 hour chart, every candlestick represents 4 hours. If we're on the 1 hour chart, it does not matter. Every candlestick represents 1 hour, and you get the gist. If we're on a 5 minute, what does every candlestick represent? You guessed it, 5 minutes. So candlesticks are visual representations of what happened in a particular time period. Okay, so that's all it is, a visual representation of what happened in a particular time period. So let's keep going.
Oh shit!
Now, let's just say we're on the daily chart. It doesn't matter what time period. Remember, it's the visual representation of what happened in a particular time period. Okay, so we can go back. Now, speaking of this time period, let's just say we are on the 5 minute chart, all right, or the 1 hour chart, doesn't matter. Same day. Okay. Now, if it is a green candlestick, okay, for one, it had to have opened here. So it opened at 7, it went as low as 5, went as high as 13, it closed at 10. In a relationship between the open and close is called your real body. And in order for it to be a green candlestick, remember, the close must be higher than the opening price, correct? So that's what makes it a green candlestick, okay? So remember, the close must be higher than the open in order for it to be green. So it went one more time. It opened at 7, it went as low as 5, and then it went as high as 13, but closed at 10. And anything outside of the closed and open, the body is called your shadows or wicks, but most of the time you will hear people call it wicks. And then we have the opposite here, okay? So we know that it has, in order for it to be a red candlestick, the close must be lower than the opening price, all right? So within any time period, you can name 5, 10, 1 hour, 4 hour, doesn't matter. It opened at 10, went as high as 13, went as low as 5, but closed at 7. So that's all this is what happened in a particular time period. And remember, it's a red candlestick if the close is lower than the open, and it's a green candlestick if the close is higher than the open, right? Now, this is called a big green candlestick, big red candlestick. What it represents is big buying pressure and big selling pressure. Okay, so that's what these represent. Now, if you guys want to do the open and close all over again, this is what we would do. We know that in order for it to be a green candlestick, it had to have open here, it had to have went as low as here, it had to have went as high as here, and then it had to have closed here. Why? Because we understand that the close has to be higher than the opening price. And for a red candlestick, we know that it had to have opened here. Okay, this will always be the high point, and this will always be the low point, and this has to be the close. Why? Because it's a red candlestick. So we understand that the close must be lower than the opening price. And that's all it is.
Fucking
And
these
9
shits
times
up the
out of
whole
10,
year.
big red and big green candlesticks will be accompanied with a lot of volume. And volume is the number of shares and contracts traded. So now you guys understand that much. Okay. Another tip I wanted to show you guys that if you go to the TradingView app, all right, what you're going to see is what I just showed you guys: open, high, low, and close. You toggle this over any candlestick, and it'll show you the open, high, low, and close. All right, as you can see, it changes. You can go to any chart and type in 1D for 1 day chart, and it will do the exact same thing. And as you guys see, we toggle the mouse over this candlestick, and what do we see? Open, high, low, and close. All right, even the green one, and it'll flash green when you're over the green candlestick. All right, so that's how you see that on TradingView. Now let's talk about doji candlesticks. Okay, so now that you guys got a gist of candlesticks, you understand open, high, low, and close. You understand that it's the visual representation. Now we need to talk about all types of forms of candlesticks. So we're almost done. You guys are already candlestick experts already. All right, now doji. It is when the open and close are virtually the same. Okay, so we're going to go in and show you guys what this is. So we understand that it had to have open here, okay, and it went as high as here and low as here, but it ended up closing here. All right, so it's when the open and close are virtually the same. So that's virtually a standoff, as you guys can see. All right. So in other words, it opened here, the Bears were in control. Then the Bulls came back to push it this high. Then the Bears came back in control to push it near where the open was to close this session or whatever time period it is. Now this one, same thing. It opened here, and then it was a fat red candlestick at first. All right. So the Bears were in control. Then it went as low as here, and then it went to close near highs. So this one is what we call a dragonfly doji, but it could also represent a candlestick pattern that I want to show you guys next, which is called a pin bar. All right, so notice how the open, close, and high are nearly the same with this candlestick pattern. And this is actually a win for the Bulls. And you guys will know why I say that in the future. Okay, this one is open here. Then it was a fat green candlestick at one point, right? So it was a fat green candlestick, and then this is the high point, and then it went to close near the low. So this would be more of a bearish candlestick, okay? And it's all about momentum as well, visual representation of where the momentum may necessarily go. And this is nothing but an extended version of this one, okay? That's all this is, an extended version of that. So now you guys understand the doji candlestick and the psychology of candlesticks, okay? It's about a visual representation of what happened in a particular time period. Okay.
the holiday gift collection at Espresso.com. Sometimes it takes a different approach to see the possibilities all around you. Capella University is an online accredited university, so you can be confident you're getting a quality education on your terms.
Style and substance in the GMC Sierra. Work at 0% APR plus 3,100 total value on the Sierra 1500 model. Ah, party. Cough, congestion.
All in one and done. Mucinex Kickstart.
Headache. Mucinex Kickstart gives all-in-one and done symptom relief. Also, try new severe congestion and cough Kickstart. Relief starts with a kick.
So now it's time to get into the fun part. These are called candlestick patterns. Now, I'm only going to give you guys my favorites, okay? I'm not going to give you guys ones that I don't use and all of that. So let's get right into it. So number one, we have the pin bar pattern. This is the number one candlestick pattern on the market, and I'm going to explain why, okay? So if this is a bullish pin bar, right? Let's just imagine we're on the daily chart, correct? And we have 3 red candlesticks in a row, correct? 3 red candlesticks. And this appears to be a nice downtrend. And at one point, this was a red candlestick. All right, so let's go over it. It opened here, okay? Then it went as low as here. And then the bulls came back at control to push it above the open, right, when it's high as here, and then close here, correct? So now that you guys see that, the momentum is pushed where? Up. It was once a red candlestick. So you can look at this as a slingshot, right? A slingshot. You got a ball, something right here, and then pushing the momentum upward. And how do you enter this candlestick pattern? You enter above highs here, okay? And your entry point will be right there, which is typically 15 cents above highs, which I will talk about later. And yes, you guys see the momentum has shifted, and that's why it's called a bullish pin bar, not a hammer, because a hammer has to close near highs, and that rarely happens. And the shooting star has to close near lows, and that rarely happens, okay? So let's get into the psychology of this candle, which is the opposite of that candle. Now we have what is called a bearish pin bar. And let's talk about this one. All right, so we got a bunch of green candlesticks in a row, right? And it almost appears like this one is going to be a green candlestick as well, but it is not. They threw us for a loop. So now we see what's going on. We got it open here when it's high as here. And at first this was a green candlestick, but the bears came back in control, right? To push the prices to close here, right? And then went as low as here. And if we're buying puts, all right, and make sure you check out the option trading portion of this, you would enter puts 15 cents below the low of this candle, which is the end of this wick. All right, and now you guys see why this one is like a slingshot downward. All right. All right, it's like you're pulling the slingshot, you're going down, right? And that is why these are the most powerful candlestick patterns as a single candlestick pattern, because it can reverse a trend easily. And we're going to talk more about that right now. So think of a candlestick pattern like the pin bar as a lollipop with a rocket ship attached to it, or an astronaut bending his knees and jumping as high as he can, correct? Now let's get right into it, folks. Now that you guys see what's going on, let's talk about this part of it. Now, this part is pretty dope. So let's just say we draw a line going straight across, right? So this line goes straight across. Let's pretend like I drew a straight line there, correct? And this is a support line. So at one point, when it hit this support line, correct, what happened? It was a red candlestick at first, and then it slingshot its way all the way up. And because it's at support, this pin bar, it gives it a little bit more of a reason to go up because it hit a support. Notice that they both touch at a line. So you had to draw this line, of course. But notice that this pin bar is at a form of support, which is the floor. Remember, support is your floor, resistance is your ceiling. And look what happened as a result. This pin bar went up. So that's one way to look at it. We can look at this one as well. It already has a support line drawn. We got 1 touch of support, 2 touches of support, 3 touches of support. All right. Now I want to tell you guys something. This is not a pin bar. We want it pinned at some form of support. Okay, what else is not a pin bar? This is not a pin bar, right? Because we want it pinned at some form of support. We want it to be a noticeable pin bar. All right, so this is a noticeable pin bar pinned at a form of support, and it went. Okay, now this one right here is what I'm going to show you guys an example. Out of these two, which one is your favorite? You will probably choose what? I had to give you some time to think. I would choose the green, and more than likely, most people would choose the green out of these two. Now, I do want to point out something. Jolly Rancher is the only candy that I know of where the red is actually better than the green. That cherry is better than the green apple on Jolly Ranchers. All right, so that's one thing I do want to point out. Even the Laffy Taffy, the green Laffy Taffy is the best Laffy Taffy. But this particular lollipop, the green is superior, in my honest opinion. And we all know this can cut the roof of your mouth if you eat them a lot. All right, so let's draw our support line. And don't clown me for my support line, but let's draw it. All right. There we go. All right, I tried. So even though we like the green, the red is good too, as you guys can see on this particular example. We have a pin bar here. Remember, we always want pin bars at some pullback, right? We always want pin bars at pullback. And this is another form of support. Support can go all types of ways. Support can go this way, where stocks are bouncing down from it. Support can go this way. Remember, it's about what it bounces down from. So if you were to throw a ball at the floor, that would be support, right? And support can go this way, right? It could be all types of support, all right? As you guys can see, it can go all types of ways. And, you have, if this is a resistance and it breaks this resistance, that resistance can now turn support, which is called a break and retest, all right? So you guys see what's going on, like right here. It broke resistance right here, right? And now you see this resistance turn support, right? This was a resistance point, a high. So you guys are learning a lot already about support resistance. And we haven't even gotten to that part of the course, okay? And as you guys see, this is a pin bar again. Now you guys got the full context of what a pin bar is, all right? Which is the most powerful candlestick pattern you can get into. And remember, you enter above highs. And I also want to point out something, all right? Sometimes, so I want to point out this. You see how you enter right here? If this is the stop loss, so you stay in the trade as long as it doesn't hit your stop, which is the bottom of this candle, all right? So your stop, okay? The bottom of the candle is your stop. So if you enter calls here, you can stay in calls as long as your stop did not hit if your banking wanted to go up higher, okay? So that's another rule of thumb. Now, I'm personally a bullish pin bar player. I don't play them bearishly, but you play them the same way, okay? You want it to be trending upward, okay? You want the candlestick to be trending upward. Remember, you enter your puts here, your betting want it to go down. This is your stop loss, the top of this candle, all right? Because we're playing a bearish pin bar. As you can see, it ended up working out. And notice how it came to retest, but it also did not hit our stop yet. So you could have stayed in the entire time, long as it does not hit your stop. Okay, that's a very hard thing to do. I personally would have got out here, just being me. But if you bag held, you can also get out here again. You got another chance to get out here if you're buying puts, and if you bag held again, right here. All right, if you bag held again, you can get out right there. Now we're going to talk about the bullish engulfing pattern. All right, this is the last candlestick pattern, and you guys are candlestick experts. So it is literally just like the pin bar. It is high probability. Okay, so these two are the top high probability candlestick patterns. Let's talk about them. All right. Now we do have one more candlestick pattern to talk about, but it's not as high probability. These two are the most high probability. Okay. Now let's get into it. So we have a bullish engulfing and a bearish engulfing. And basically what we're looking for is a downtrend. Okay. Downtrend, right? So we got all these stops pointing downward. And then we got a small candlestick pattern here, pretending like this one was large a little bit, right? And what we're looking for is the body to engulf the entire body. So notice how this body, which is right here, is getting engulfed. So the open and close are literally higher and lower than yesterday. So today engulfs yesterday, all right? On both patterns, today engulfs yesterday. So notice how the body, so it's about the body, is larger and is within the body. So this green candlestick can be just a hair right here and it will still count. This one, and it could come down just a hair right here and it will still count as an engulf. As long as the top and bottom are both, lower and higher, if that makes sense. So right here, what do we have? You guys already know how this goes. It's a green candlestick. So open here, when it's lowest here, and then when it's highest here, close here, right? You gotta see that. We know it's a green candlestick, and because it's almost like it's eating the trend alive. So as you guys can see, because this engulfing pattern happened, it made the trend go up. How do you enter this? At the high of the engulfing candle, which would be here, 15 cents above highs, and then right here as well. The bearish engulfing, pretending like this is a trend.
Anyway, y'all been fun.
A bunch of green candlesticks. We have a small green candlestick, and then if we want to buy puts, we enter right there, and it's essentially eating the trend. And we're going to talk more about this. So
good health support, daily nutrient supports, and billions of live probiotics. Everyone said it would take 2 years to earn a master's degree in business. Everyone except WGU. Their unique online format allowed me to earn my degree in just 12 months. Learn more and apply today.
Meet your new favorite email design platform. Create stunning emails without touching a single line of code. With our editor and click-worthy templates, getting started couldn't be easier. Start designing today. Everyone's gearing up for the holidays. In a Chevy of their choice. And it all comes together in a Chevrolet. Chevrolet, together, let's drive.
So this is like Pac-Man, right? You guys see your eating is completely engulfing, correct? Now what do we have? We have a downtrend, and that's just like the pin bar. We're always looking for a downtrend, okay? And as you guys can see, the body engulfs. It doesn't matter if those wicks do not matter, or or they call it the shadows. It's either or wicks these things can go to heaven or hell, and all that matters is this body. It still counts as an engulfing. These things can go as far as they want. As long as the body engulfs as long as today engulfs yesterday, it's an engulfing pattern. All right. So that's something that you guys need to know. Now, it's almost like if you ate a spider and had his legs hanging out your body. Out your mouth. And right here, what do we have? We have
a couple of
an engulfing pattern.
That sounds horrible.
And look what happened as a result. All right, I have a secret. Engulfing patterns at 200 moving averages are a very high probability. This was Disney, and as you guys can see, we have an engulfing pattern here. And look what happened as a result. It hit the 200 MA, which is this orange line, which is the 200 daily moving average. Basically, it calculates the closing prices of the last 200 days and then divided by 200. You get what I'm saying? And that's why it moves the way it does. And the engulfing pattern happened here, and as a result, this thing went crazy. So bullish engulfings at 200 MAs and forms of support are high probability. So you can play them off moving averages, and you can play them off of Fibonacci's. You can play them off of support lines. All right. And like I told you guys, I'm more of a bull than a bear. I like to buy pullbacks. That's just me. All right. Now, this is our last one, and this is a bullish Harami pattern. Now, today is smaller than yesterday. Okay? Today is smaller than yesterday. Now, unlike the pin bar, you can call these both. It can be Harami or an inside bar. Okay? And I'll show you how inside bars work. All right? So we have inside bars all the time in the stock market. All right, now the unique thing about the Harami pattern, we're going to talk about it, how to play these. Now, are they as high probability as the other two? No, the other two are very high probability. But this is something that you need to know. Okay, now Harami means pregnant in Japanese. Look it up. Look up Harami. What does Harami mean in Japanese? Pregnant. All right, now right here, let's talk about it. Now that you gotta understand it means Harami, and today is smaller than yesterday. In order for it to be a Harami pattern, let's talk about it. Let's grab our thing. All right, so let's just pretend you're a couple, right? You guys are in your honeymoon phase. You guys meet here. It's always like, okay, we just met. Look at all these green candlesticks now. We met. It's green. We'll get into our first argument, right? And you know what happens? Next thing you know, she is pregnant. Everything is good.
From the smoke.
How do we enter these? How do you enter this? You enter at B. You put pretty much, you mark the highest and the lowest point, and that is your range. And
I'll come back and holler at me.
Is a break above the high and low of that candle, including the wicks. That's why you saw
Stops the kitchen mixer.
when it was the inside